Yet again, 2022 was an extreme year for Tesla, and its stock cost arrived at all-time highs on different occasions. This was especially unforgiving with Tesla financial backers, who had elevated requirements for the stock when the year started. This time around, financial backers are expecting to see indications of development in the worth of the stocks this year, and fortunately for Tesla financial backers, here is one impetus that could send the stock up to 10 times higher in only one day. You certainly don't have any desire to pass up this one. Tesla has as of late delivered its turning point for the final quarter of 2022, and it has established the standard for electric automakers. The vehicle organization revealed final quarter profit, including income of $24.32 billion and profit for every portion of 1.19 as per Tesla automated income, adding up to around $21.3 billion in the 3 months finishing 2022 and including $324 million of conceded income connected with the organization's driver help frameworks during the current year. Tesla intends to go significantly higher, conveying around 1.8 million vehicles in 2023. The automaker says this addresses a development pace of around 40% compared with 2022. Tesla revealed that it intends to develop creation as fast as conceivable in accordance with its 50 build yearly development rate, and it added that this number will keep them in front of their drawn-out objective. What's the significance here for Tesla? We should figure it out yet before we do. On the off chance that you like this kind of satisfaction, remember to like, buy in, and turn on warnings to move cutting edge on everything along with Tesla vehicle deals are slowly going off the roof, and this new objective could mean another achievement for the organization. As per Tesla bull Dave Lee, 1.8 million conveyances for Tesla this year would imply that the vehicle organization makes a long-term year-on-year increment. It's thrilling that Tesla is now near accomplishing this in the final quarter of 2022. Tesla conveyed 405,278 vehicles, which as of now amounts to more than 1.6 million vehicles per year. By examining the creation rate, this gives a significantly higher value of near 1.8 million vehicles. This is utilizing Tesla's creation and conveyance rates for the earlier year, and these numbers are supposed to increment in the approaching quarters as the vehicle organization is yet to increase creation in its manufacturing plants as per Musk. Tesla might possibly make up to 2 million, but he has brought down these vehicles and figures for good measure because of unsuitable conditions. The Tesla chief further talked about the automaker's interest, expressing that Tesla automaker has seen colossal orders in January year to date, more than it has at any point in history. Musk added that orders have sooner or later gone much higher than creation, so in the event that this creation rate is supported all through the year, Tesla might actually convey multiple million vehicles in 2023. There's no question that there is an appeal for Tesla vehicles, and this request is supposed to continue expanding in the coming quarters with a significant increase at its plants worldwide. Tesla is likewise expected to fulfill this need, so with creation and request rates on a general basis, Tesla will keep more development and income, which might actually make the organization's stock cost climb. It is critical to take note of the fact that there are a few impetuses for Tesla stock this year, and this is only one of them. As per renowned Tesla financial backer Cathie Wood, she sees huge additions ahead for Tesla later on, saying that just from electric vehicles, there could be just about a 5-fold expansion in Tesla's stock during the following 5 years. Chief added that for the people who trust in independent vehicles, it's more like multiple times during the following 5 years, thus she stays bullish on Tesla. She predicts that the organization's stock could arrive at multiple times the new cost, which would be around 653.13 times at 1,699. Obviously, there is a ton for Tesla to do to arrive at this cost. Following a ruthless year for innovation stocks, individual financial backers have lost their hunger for purchasing the plunge. The dropping has been powered by increasing loan fees, that player development stocks stress that requests will dissolve assuming there's a downturn, and worries that most procurement of Twitter will redirect his consideration and increment his deals of Tesla stock to stay with virtual entertainment above water. Development stocks like Tesla experienced significant hits in the earlier year during the various climbs in financing costs by the Fed. The central bank rolled out the fastest series of rate increases since the mid-1980s, raising its benchmark bureaucratic assets rate by 4.25 rate directs in a bid to battle high expansion. Took care of authorities, who further projected that the rate would increase to a peak somewhere in the range of 5 and 5.25%. Tesla was among the greatest hauls on the file, and most deals of Tesla stock, and the interruption brought about by his Twitter takeover didn't resist. As per Epicos Karvaskaya, Senior expert at Swissport Bank, it seems like the trust in Tesla is gone and the automaker's fantasy unexpectedly finish. She added that financial backers are more anxious to perceive how the looming downturn will hit Tesla. What contests from other electric vehicle creators will mean for Tesla's piece of the pie, and when Elon Musk's Twitter undertakings will quit harming Tesla, the feed race raised multiple times last year in late government information and business. Studies have highlighted a more extreme drop-off in assembling action. The national bank's rate increments are pointed toward easing back expansion by diminishing interest, and there is proof that this is precisely exact thing is happening in the business area anyway. There are signs that the Fed might choose to support a more modest expansion in financing costs just to authorities developing certainty that the economy is answering their endeavors to kill interest and cut down expansion. As per late news, U.S. central bank authorities are planning to slow financing cost increments and discussion how much higher to raise them subsequent to acquiring certainty that expansion will ease further this year. In late open proclamations and meetings took care of authorities have said easing back the speed of rate increments to a more customary quarter rate point would give them additional opportunity to survey the effect of their increments such a long ways as they figure out where to stop. Took care of bad habit. Gerald Brainard additionally said that bringing rates up in more modest additions provides the firm the capacity to retain more information and presumably better land at an adequately prohibitive level anyway, regardless of the serious difficult stretches that Tesla had for the automakers. Devoted fans among retail financial backers, the dangers that you request on most distractions with Twitter haven't been sufficient to sharpen them on the stocks that became one of Wall Street's most noteworthy flyers during the pandemic. In spite of the ceaseless drop in Tesla shares, retail financial backers keep on gathering up additional portions of the automaker, and this is reasonable as a result of the vehicle organization's normal designs for the year. Additionally, issues of an apparent drop in Tesla's interest may probably be disappearing, according to late reports. Additionally, it was referred to that Tesla's purported request issue might be a benefit as per ongoing news. Tesla is attempting to utilize the overbuilding issue to keep up with a piece of the pie, and the automaker's cost slices and stacked-up stock represent a more pressing issue for rival new companies. Tesla has the opposite issue of its rivals right now, and Elon Musk is evaluating how to utilize it for his potential benefit. The vehicle organization can stand to bring down card costs while still recording huge benefits from these cards. The EV organization is allegedly hooking interestingly with a swelled stock and gentler requests for its vehicles and trying to turn this test into a benefit. Tesla has executed a progression of cost decreases on its most famous vehicles in the US, Europe, and China. Tesla is offering its more well-known vehicles with limits of up to 20% of the first pile of costs, a move that in the US alone could cost Tesla as much as $7 billion in benefits this year. Yet examinations say it's a drawn-out obligation to keep Tesla's spot as the main merchant of electric vehicles. Tesla may before long be forfeited against benefits for portion of the overall industry in the present moment, yet in the drawn-out it ought to benefit fundamentally from less. The vehicle organization has cultivated ground to rivals as of late, dropping from almost 80% of the EV market in 2022 to 65% last year. Thus, this forceful move to cut costs might be exactly what Tesla needs to return into the